I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So world markets continue to be mixed, with Europe up or down small, China lagging, and Japan at 8-week highs. Our market's relatively flat after Fed Chairman Ben Bernanke told us that the Fed's asset purchases are by no means on a preset course. So what's your take on the market right now, Scott?
Well, you know, some say that we're stalling ahead of all-time highs, and some say digesting. I think overall, pretty healthy action. You know, we've turned from the macro to the micro, meaning that when, you know, you get a big move like we've seen in the S&P from the 1560 lows all the way up to where we are around, you know, 1680, you know, when you digest, you want to look at individual stock names, look for relative weakness, relative strength, and especially during earnings season, when, you know, these companies have a chance to report, talk about their business or whatnot, and then you get a lot of stock-specific movement. So lately, trading the individuals' names have been much more, you know, I would say profitable or not profitable if you're in the wrong direction, versus trying to play the indices. But then sooner or later, the indices, after digestion, will pick which way it wants to resolve.
So what are the levels to watch?
If you look at the S&P, you'll see this flag type pattern. It's what we call a bull flag, meaning you had, you know, a big move from the lows. Here's your 1560 low. Here was that digestion right when it took back to 50. Another nice move all the way near the highs here. Okay, that is the old high, 1687. So let's take a real closer look here so you can really see what's doing. Okay, so let's take a close look here. And a lot of people are trying to make a little bit of a bearish call up here, which I'm not exactly sure I agree with. You know, the two things that could happen that could bring out sellers is, one, an outside day like we saw on May 22nd. That's when it pushed through 1674, right? And if you were short versus 1674, you had to cover. If you were avoiding the market during this major move, you then may have put some money to work, squeezed the shorts, got people in, and then reversed and engulfed this range. That was an outside day. That was a day to take risk off, maybe get short, and then look what happened. Now we're up here again, okay? Now people are saying, do we have a double top? You know, are we going to go to 1725, blah, blah, blah. P.S. If you were short, what you would do is, if we take out 1684 to 1687, it would be a very smart decision to cover, especially if you've been rolling it up this entire way. If you avoided this rally and you have to keep up with the indices, and we start breaking above this, and you're now long stocks till, and we get above 1700, you have to buy it. So right away, if we get a push through failure like here, maybe you get bearish, or, you know, we start digesting here and then we roll over and take out this, you know, 1671 with authority. But for as of right now, nice consolidation, letting the 8, 21, and 50-day catch up. And as long as it stays that way, I would say stay the course, which the trend is your friend, finding leadership and taking trades and knowing your time frame.
Well, now we mentioned that Japan is at 8-week highs. So if you bought the 20% dip off Japan's highs, is it time to give some back?
Yeah, well, why not? Always trim and trail. Just don't trim and trail yourself to being flat like I did in most of my good names, because the move was so big. But anyway, you know, if you bought that 20% dip, there's huge elections coming out this weekend. And why wouldn't they vote Abe back in, considering, you know, it's been his direction that ignited their markets, that hopefully will turn around their economy. And, you know, so people are trying to maybe get involved before the election. So, you know, it could be just something funny. You look at the EWJ. Huge move. You know, you go to the chart here and you will see that, you know, this was the low, okay? I think we started talking about it, or had that CBC segment where we said you should be buying the dip right around here, maybe a few days early, but look what happened since. Okay, lots of different entries. It's now almost filled this gap all the way up, right back to the highs. So after what was a 50% move from November, 20% retracement, right back up. So, you know what, still above the 8 and 21, no reason like this to get out of stocks in Japan, but you always want to trim and trail, especially before a major event, just in case something happens that people aren't forecasting.
Well, there are some potential nice setups out there right now. Chinese internet stocks have been getting some attention again, led by that bounce back in BIDU on the news that it's acquiring 91 Wireless. That we got that news on Monday, and since then, BIDU has showed some real relative strength.
Yes, and for me, I'm a little frustrated because I started to play the hard money when I woke up, and then it just started to act better, and money went into these Chinese names. And if you look at BIDU, BIDU itself has been a laggard trade, but right around here started acting better. Okay, then all of a sudden, boom, closed above one downtrend, really nice day, and then you had the news where you gapped up. That day wasn't the day to buy it because, they sold it considering the size of the move, but it had a nice gap to trade against. And then yesterday, it started going and didn't even wait. You look at the long-term chart of BIDU, and you'll see it's been out of play. It's been, a laggard. But at this particular point, it's trying to wake back up. Maybe because, fund managers need something to do, and they said this used to be a really good one. Let me get this chart a little bit more intact here. Let's go to the weekly. It might make it easier for you to see. Look at on the weekly this wide range bar, which is what I call an igniting bar. So I'd say the longer it stays above this area, this 103-ish or 105, the higher the probability it gets back on track after being out of play for almost 2 years.
And SINA had begun to show us signs of breaking out, and then it got an extra boost from BIDU on the news.
Yes, and SINA used to be, a mover also. And if you look at the weekly chart in SINA, you'll see that just like BIDU, you have somewhat of a descending channel here, and it's just starting to wake up. So those who trade on a weekly basis, this looks pretty good, considering look where it was. And on the daily chart, we played it a few different times, and overall, a little sloppy this is, but finally a clean move, closing on the highs, and this is your next pivot. If it gets above, 61, 65, it can continue, and it doesn't have much resistance above that. So I would say keep these names on your radar because the setups are starting to really show their faces.
How about QIHU, also trading at all-time highs and got a powerful day yesterday, so is there still a trade here?
This one is extended. This one just shows you that, if you pick the right name in the right group, it could make new highs, and this was a newer stock. If you look here, you'll see this stock is extended. It broke out. It's on the move. I don't see any kind of buy setup except for the fact that, it's trending. I guess if it were to get above this little 2-day high, it can continue. Just be careful because it's starting to get extended, but the next pivot here is around 56.
Sohu has a pretty tight pattern. What do you think about this one? Is it getting ready for a breakout?
This one was part of that whole old school group. It was like SINA, Sohu,
right,
and the test where they were like the three amigos, and all of a sudden it's had a stealth move. We've talked about it, but no one really, I think, is as involved as we could have been. So our bad that we might have missed this one. But you look here at the chart, and you'll see it's very tight again. Okay, this is the last breakout here. What a clean breakout on that day, right? Above 54, clean move. Since then, it's been digesting. Okay, in a nice channel now where you could see, it's been between 55-ish and almost, 55-ish. My mouse is a little sticky today. Little sticky. Hold on. Boom. Okay, unattached. And now you have another nice little setup here. So, I would say if this starts getting above 66.30-ish and then clears this, you're going to get another nice clean move. Because if you look at the weekly chart here too, you will see that, overall, in the scheme of things, okay, it's just working its way back up. So above this 70 level is pretty big. Next big resistance comes in closer to 80.
And dang, I always like this name. It's been hovering around the 8 and 21 day for the past 3 weeks and cleared a pretty key pivot level yesterday.
Now, why do you like this name, Dang?
I think it's funny.
Dang, we're here.
I don't know, I just like it.
Well, anyway, you look at the chart, and there is a lot to like here, from a little guy perspective as far as, some of these cheapies. Here it is, above 750. Yes, a wide range bar, up a big percentage, back on the map. Look at this move here. That shows you when you find a beautiful, treasures for trash trade, because this was in someone's trash bin. But if you saw this breakout here, it became your treasure. Big move. Consolidated, looks like it's on the move again. Next real resistance for Dang is 828.
See, now you like to say it.
Yeah, well, on the trading floor, it's very fun, like Dang on the way.
See, there you go. I'm not the only one. All right, well, coming up, we're going to go in the trenches with earnings, and stocks reported earnings, and we're going to check in on where they're at now, right after this quick commercial.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, You can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're checking in on stocks that reported earnings, and we're going to see where they're at now. And companies have been either glass half full or glass half empty. We're going to start with some negative reactions. eBay, their earnings came in line at 63 cents per share, but revenue missed expectations, and the stock did trade down after hours.
Yes, because it was at the top end of the range and it needed a guide up in order to break out. And it's also had a huge move over the course of the past few years. So anytime you get somewhat of a mature company, people want to see how mature is it. And according to their earnings, you know, it's not having trouble, it's making money, but you know, it missed and guided lower. So you look at the chart pattern here, you know, it was at the top end of this range, ready to deliver. So this is probably a little bit of a blind side for some. So I would say, look at these moving averages. If you're not in eBay and you didn't take it into earnings, you know what, you have the luxury of taking a look here. I believe it's down almost 7%. So if it is an overreaction, you know, perhaps you could buy it versus a low. But the way I do it is I let it print the low in the first 15 minutes, then trade against it. If it were to open down here and not rally and have a huge hole in this chart, then you'll have to wait a few days, see if it can consolidate, and then we might get a trade in. But as of right now, here's some support. So see how much off the lows it closes, or if it opens down 7% and closes down 12%, then you know it's in trouble, and you probably have more downside coming for coming weeks and months.
And we did talk about how Intel was priced for a lethargic report. It's got this slowing PCs issue, and earnings did come in line with expectations, but revenue missed, and it did trade lower after hours. It's sitting right above the 100-day, though.
You know, like after hours, I was watching a trade. I didn't really touch it, but it was just funny that they were trying to give it a pass. They were trying to buy it. It was down. It went positive. But it really, the report was soft, and it is in a slow group, and they've been slow to get into the handheld market. So with all that said, that's why the stock hasn't been reacting well lately, or it's been, glass half empty. So with that said, it's had to move off the lows. It's opening lower. If you want exposure to Intel, I'd probably wait. But see how it reacts. See how if it opens up around this 23, and again, just like eBay, does it close? Does it open around 23.5 and close down below 23, or does it open around 23.5 and close at 24.5 and price it in? So that's what traders will be looking for at the open.
How about some glass half full? Let's be optimistic now. IBM beat on earnings but missed on revenue. The street was impressed because the stock traded higher after hours, up to 202.50, right below the 100-day at 203.73. To see if it can get there.
Well, the thing is with this too, it's one of those stories where the revenues are light, but the reason why the earnings look better is because of the buybacks. And all these companies are doing buybacks, and rightly so, right? They buy back their stock, they reduce the float, they keep the demand to the upside, and that makes everyone happy. But unfortunately, they're not hiring, these companies, instead of, using the money to hire people, which they don't have to because they're running efficiently. Otherwise, they get, blindsided by Wall Street. Anyway, this is just the mantra. Bottom line is IBM was at the bottom of the range. People were thinking it would miss. I thought it would potentially miss. It didn't. I didn't touch it going into earnings. Now it's up, a few percentage points. So let's see if it's a rally and if it's for real. Look where it was trading, kind of near, big support. So, it does need some type of reflex rally. But if it can't get back above 200, right, where the resistance is, and puts in at a high, lower high, lower high, I think the street will take it as a negative and be unimpressed. So for me, I'm not really going to trade it. I'm not going to short the open, which some might. I'm going to see what type of day does it have. Does it open up, at 200 and then close at 204? Does it open up at 200 and close back down at 195? That'll also help me a little bit with market direction.
How about SanDisk beat on earnings and revenue and traded higher after hours, the high of 63.10. Now the 52-week high is 63.73. So to see maybe it can make a new high today. Yes,
well, like Yahoo was priced right there for a beat. Yahoo actually missed on revenue, but the whole Chinese business was a positive spot, and really just 27.5 was your spot in Yahoo. If you take just a really quick look at Yahoo, just to show you how, stocks at highs, whether you don't think it's a good report or not, you know what, this was your pivot, 27.5. It got above 27.5 and never looked back. What a move in Yahoo, ever since we talked about this as being one of our focuses when it broke above 1660. So with SanDisk, I wouldn't have an opinion. I would do the same type of thing here, okay? If it can get above and stay above this area, it's been wedging, perhaps you get another trade, and that trade comes in right around, like you said, 62 to 63. So if it doesn't get above there, it might mean it just needs more time. But ultimately, it's been in a strong trend. The stock's regained some of its mojo. So just not sure if there's a trade after hours. Know that pivot point.
All right, time for some quick hits here. Let's talk Tesla. Shook off that Goldman note, regaining momentum with over 10% of gains yesterday and reclaimed the 8 and 21 day. So momentum back.
Well, it just shows you that entries and exits matter. If you sold on that outside day before the Goldman note, you were fine to look for opportunities yesterday. And yesterday we had the perfect red dog reversal. This is a strategy we use to find cash flow trades, swing trades, macro inflection points. Doesn't matter how you use it, but what it is it's a way to get involved with the plan. And if you look at the chart here at Tesla, you will see, this was that exhaustion gap here. So if you did get out at 129.94, or you didn't get too beat up, trying to play the dip here as it broke the 8 and 21 day, you came in like me flat yesterday and said, I'm going to look to see how does it handle the pivot here at 107.30. So with that said, it wound up trading below it. So if you were long versus 107.30, you said, oh my goodness, I got to get out. If you sort of break that, you said, oh, look at this, Goldman's right, it's going to 84, it can go lower. What happened? It didn't. Reversed right back up above 107.30. The strategies, you buy there, you put a stop in at the low at 104.50, and if you did that, you made 16 points. Yes, it's not that easy to do that. Some people did. I traded in and out, but had a decent day there. If you look at the real quick 13-minute chart of it, you will see that there was some intraday tactical opportunity. So here was that first entry, had a big move, potent, and then digested higher. Look, didn't even pull back more than a third, then gave you an afternoon move above 18 all the way to here. So now the question is, what do you do today? I think it's up like $1 or $2. Probably into some resistance. I wouldn't be chasing this thing to buy. I don't think all of a sudden it's going to be at new highs after this type of movement. So maybe it needs time now to digest. So for me, if it's up $2, you see some relative weakness, maybe you get a cute short and then give it some time to develop a new range. But ultimately, it's good that it snapped back. I love having Tesla in the game. At least there's something to trade for cash flow. And I still don't think that the historic highs are in here.
And it's an exciting one,
yeah.
Right? It's a fun one to watch. Now, how about
electricity?
Apple? Yeah. How about Apple? Inching higher, but did fail at resistance yesterday. What do you think of the composure of it?
Apple. It's the ex-girlfriend is not as attractive as it used to be. But anyway, it did hang in there. As long as you don't buy strength on Apple, if you've been just like holding it and letting it go and buying weakness, you've been fine. But anytime you do what used to be successful in the past, adding at highs for potential more movement, you probably ruined some of your average prices, and you probably said, why do I continue to look at Apple when it's still not moving the way it used to? So, but anyway, here's a chart. Okay, you will see, it did have a decent move off this double bottom. Here was your double bottom. Okay, here is your red dog reversal at 393. Here's when it gapped up, gave you a 3-day move. Here's your digestion, and now it's just inching higher. The question is, can it finally take out 432.22 and close over it with authority to give you another move to maybe retest this downtrend where it's been failing? Or, does it break this little, like look last time it did this where it teased you every single day and then failed. So at this point, you could draw the same line and see what's going to happen this time. Maybe be long versus 428, and if it trades and holds above 432, maybe we get a little extra juice, but otherwise this Apple has a not tasty worm in it.
Knew we'd get a Reddit for in today. How about Bank of America saw a nice run before its earnings report and still got some momentum afterwards?
Yeah, at this point, either you're in it for the next year or so, or you're trading around it. I've been in for this time around for a week or so, or a few weeks. I've been pretty much long it. I would say 85 to 90% of the time since $8, and that's been for almost since last August a year, which is something new for me as I try and expand time horizons. It was a core trade, so I took it into earnings thinking that I would buy more if it went down, or I want to be involved if it goes up. So PS, look at the chart here, it went up. So now I think let it spend some time above 14, and then at some point, I look at this weekly chart, I still think that, at some particular point, there's no reason why this can't be, 15 to 16.50, come the fall. Maybe you don't even see it as well here, but look at the monthly chart, okay? The monthly chart, this peak here is actually $19, and then it's still, look where it was, and it has Merrill Lynch in there. So I still think this is going to inch its way back, to that area. If you have patience with it, you could trade it a few different ways.
And how about, while we're talking Bank of America, JP Morgan, which beat on earnings last week. It did eventually see a pullback into its 8-day, but it has been grinding higher above it.
It's flagging, and I think this is going to give us clues. A lot of these banks reported, some didn't have power to go above the highs, so the banks will let us know whether or not we could actually maybe break above 1687 or they roll over. And if you look at JP Morgan, there's a setup here, so I'm in small. It doesn't really trade well intraday, but overall you have a nice wedge pattern after a particular move into an old high, so I'm in some. Unless it really starts getting above 55.60, I wouldn't add to it, and if it does, let's hope there's volume, so this way we get another nice trade to new highs. If we go to new highs, I would think this would come with it, so keep JP Morgan on your radar as a clue.
And over in biotech, how about GILD? It has been on our radar since the snapback on June 24th. It is trading at highs. Can it keep going?
Yeah, well, at least you have a 4-day setup. Like, that's what you want. In rallies, you want moves, digestion, flag patterns, continuation. That's how you make money. Not every pattern is that exciting, and not every pattern works that well. But this one, if you look here on GILD, you had a move, and now it's digesting 4 days right in front of the old highs. So if you were looking for continuation, obviously it's going to have to get through this peak, and this peak right here is 57.86, and then that could take it to new highs. We saw a similar trade in in Celgene yesterday. Let's see how that worked out towards the end of the day. It popped above it, didn't have much power, but at least there was something to do there, and that's what we're looking for now. Things to do in July.
Right. Well, after the close today, we do have a big report from Google. I know you'll be watching that after the close. What will you be watching during the trading session?
Well, just to really talk about Google real quick also, this has been a leader. There's been many times to buy it. I talked about this in 2012 as the reason that I think it can make historic highs was that they diversified themselves from just search. They went into mobile, they have YouTube, they have handhelds, they have now Google Glass, they have all these unbelievable businesses that are starting to make money. If you look at the chart here, you will see that it is flagging above the highs. This will be the first option play that I do into earnings, and I'm not going to do a call spread like I usually do. What I'll probably do is I'll just pick an option, what's it called, maybe I'll do the 920s or the 940s, something, because if they do beat, and they're very positive, and maybe even do a split, because that would be probably the smartest thing, you could see some of those big targets get fulfilled. A 5 to 8% move in Google would take you up there. Okay, I would, unless you're long the stock for the last few years, I'd be careful being long the stock. And as a trader, if you take stock, you're being risky. I'm going to take the options most likely, checking my radio at around 3:30, or the number comes out and it trades above 928, and I can grab it. And then as long as it stays above 928, I think you trade it after hours. But if you're in the stock and it's not good and it gets halted, chances are you could be in a lot of pain. And as a trader, it's all your time frame. So I would say with Google, take some kind of option strategy. I would say that the money and the way, unless everyone's wrong, because I hate it when it's a crowded trade and everyone's saying 1,000, 1,100, blah blah blah. But this company really has the ingredients that it could be the first $1,000 stock price. So, I would like to have some involvement, and if it doesn't, then risk is premium paid.
All right. Well, with that said, happy trading, everybody. Have a great day.